In the modern financial landscape, Bitcoin has emerged as a groundbreaking alternative to traditional government issued fiat currencies, such as the US dollar or the euro. Fiat currencies are centralized, regulated by governments and central banks, and accepted as a legal tender within their jurisdictions. Bitcoin, by contrast, is a decentralized digital asset powered by blockchain technology and free from government control. This comparison explores Bitcoin and fiat currencies through three key lenses: stability, adoption, and use as a medium of exchange, highlighting Bitcoin's strengths and potential to reshape global finance. Comparing stability. Fiat currencies. Fiat currencies derive their stability from centralized management by central banks, such as the Federal Reserve or the European Central Bank or the Reserve Bank of India. These institutions adjust monetary policies, interest rates, money supply to maintain low inflation and economic balance. However, this control is a double edged sword. Excessive money printing can devalue fiat currencies, leading to inflation or, in extreme cases, hyperinflation. For instance, Zimbabwe's hyperinflation in 2000 saw prices doubling daily, rendering the Zimbabwean dollar nearly worthless. Similarly, Venezuela's bolivar has lost significant value due to economic mismanagement, with inflation rates exceeding millions of percent in recent years. These examples illustrate how fiat stability hinges on governmental competence, leaving it vulnerable to human errors or political agendas. Bitcoin. Bitcoin stability prof- stab- Bitcoin stability profile differs markedly. As a decentralized currency with a fixed supply cap of 21 million coins, Bitcoin is immune to inflationary overproduction. This scarcity coded into its protocol mirrors precious metals like gold, earning it the nickname digital gold. Admittedly, Bitcoin's price is volatile in short term, swinging from $20,000 to in 2017 to below $4,000 in 2018, then soaring over to $60,000 in 2021. Critics highlight this volatility as a weakness, but supporters argue it reflects Bitcoin's status as an emerging asset. Over the long term, Bitcoin has demonstrated remarkable value appreciation, growing from mere cents in 2009 to tens of thousands of dollars today, outperforming most traditional investment. Bitcoin's fixed supply offers a powerful advantage. It cannot be manipulated by governments or diluted by printing presses. During periods of fiat currency devaluation, such as Venezuela's crisis, Bitcoin has served as a lifeline for citizens, preserving wealth when local currencies collapse. As its market matures and adoption grows, volatility may decrease, enhancing its stability. Thus, Bitcoin shines as a hedge against inflation and safeguard against centralized mismanagement, a stability rooted not in policy but in mathematical certainty. Comparing adoption, fiat currencies. Fiat currencies enjoy unrivaled adoption within their domains. The US dollar is accepted universally in the US, the euro across Eurozone, and so forth. Backed by legal tendered status, fiat is ingrained in daily life, used for taxes, wages, and commerce. This widespread acceptance is reinforced by centuries of trust in government systems and infrastructure of banks, ATMs, and payments networks. Globally, the dollar's status as the world's reserve currency further cements fiat's dominance, facilitating international trade and finance. Bitcoin. Bitcoin's adoption, while nascent compared to its fiat, is expanding at a impressive pace. Launched in 2009, it has transformed from a niche experiment to a recognized financial asset. Today, thousands of businesses accept Bitcoin, including major payment players like Microsoft, Overstock, and AT&T. Payment processors like PayPal and Square have embraced it, enabling millions to buy, sell, and use Bitcoin seamlessly. In 2021, El Salvador made history by adopting Bitcoin as a legal tender, allowing citizens to pay taxes and transact with it along with the US dollar. A bold step signaling its viability. Institutional adoption adds further momentum. Companies like Tesla and MicroStrategy have invested billions into Bitcoin, treating it as a treasury reserve asset. Investment funds now offer Bitcoin exposure, bridging it as a traditional finance. User growth mirrors the strength. The number of Bitcoin wallets has climbed into tens of millions, and trading volumes on exchanges like Coinbase and Binance regularly hit record highs. While not yet to rival to Fiat's ubiquity, Bitcoin's adoption trajectory is steep and promising. Its decentralized appeal resonates with tech-savvy generation and this distrustful of centralized system, positioning as a currency of the future. Comparing use as a medium of exchange, fiat currencies. Fiat currencies excel as a medium of exchange for everyday use. Cash transactions are instantaneous, and digital payments via cards or apps settle quickly with minimal fees. This efficiency stems from widespread acceptance and robust infrastructure. ATMs, point of sale system, and online banking makes fiat seamless to buying groceries, paying bills, and dining out. Governments ensure its utility by mandating its use, creating a frictionless experience for consumers and businesses alike. Bitcoin. Bitcoin's role as a medium of exchange is more nuanced but offers unique insights. On its base layer, Bitcoin transactions can be slower, taking 10 minutes or more to confirm, and fees can spike during network congestion, making it less practical for small purchases like coffee. However, Bitcoin excels in specific scenarios, particularly cross border payments. Traditional international transfers via bank can take days and incurs fees of 5 to 10% or more. Bitcoin, by contrast, can settle globally in minutes, often at a fraction of the cost, bypassing intermediaries like SWIFT or Western Union. This advantage shines in maintenance remittances, where migrant workers send billions home annually. In countries like Philippines and Nigeria, Bitcoin offers a cheaper, faster alternative to conventional channels. Moreover, Bitcoin empowers the unbanked. Over 1.7 billion people worldwide lack access to banks but own smartphones capable of handling Bitcoin transactions. In nations with unstable currencies or capital controls like Argentina or Iran, Bitcoin provides a censorship resistant tool for preserving wealth and trading globally. Technological advancements bolstered Bitcoin's potential. The Lightning Network, a second layer solution, enables near instant low cost transactions, addressing scalability issues while not yet ubiquitous. Such innovations suggest Bitcoin can evolve into a more versatile medium of exchange. For now, its strength lie in large value transfers, financial inclusions, and borderless commerce, areas where fiat currencies often falter. To conclude, Bitcoin and fiat currencies present distinct profile across stability, adoption, and use as a medium of exchange. Fiat offers short-term stability and universal acceptance, but is prone to devaluation and centralized risks. Bitcoin, though volatile, counters with long-term value growth and inflation resistance, but its adoption surges among businesses, institutions, and nations. As a medium of exchange, fiat dominates daily convenience, yet Bitcoin excels in global transactions and accessibility for the underserved. Far from mere speculative assessment, Bitcoin's decentralized design and growing ecosystem position it as a formidable complement, a potential challenger to traditional currencies, heralding a new era of financial freedom and innovation.